Hey, what's up, my friends? So welcome back to this month's price action analysis where I break down to you step by step the best trading opportunities that I'm looking at in the market right now. I share with you my thought process, the reason why I'm looking to enter a trade, how I'm going to manage it, entries, stop loss, and much more. So to kick things off, right, let me just share with you two trades that I took recently. One winner, one loser. So let's get started. So the first trade that I want to share with you, it's New Zealand yen. So let me share with you the thought process to this trade. Why did I enter? Where did I enter? And what's the outcome of this trade? So New Zealand yen, as you can see, I think we can go to the 8-hour time frame. So on this time frame, at this point, I was actually looking at this market and I was bullish on it. I noticed that on this time frame, this market is in a nice bullish uptrend, containing a series of higher highs and higher lows. As you can see over here, higher lows, higher lows, higher lows, and we have this over here where previous resistance became support and could become support once again. So where it caught my attention is when the price made a pullback towards this area of value, towards this area where previous resistance became support. And then on the next candle, as you can see over here, this one here, the price formed a bullish engulfing pattern where it actually engulfed right over the last three candles, 1, 2, and 3, and closed higher for this time frame, the 8-hour time frame. So what I did is I went long on the next candle open, which is over here. On this small bearish looking candle, I went long at the open. My stop loss is 1 ATR below this low, somewhere here. And my first target is, it's quite interesting for this one because I noticed that this market, it has two swing high. This extreme one over here and this nearer one towards me. And I have no idea whether this market could easily break out of this level or whether it will quickly, just blast through this level. So my plan is that I'm looking to take half my position at the swing high, and I'll watch how the price action unfold itself right before I decide to take half the position off. So let me just walk you through what I was thinking. As the market hit up higher, okay, you can see over here, I'm thinking, okay, it's still pulling back and now breaking out higher. I'm thinking, okay, the price might get to this swing high, so let's watch how it reacts over here. So what I noticed is that it formed a doji, closed down lower, and on this candle it had another lower close on this candle here. So to me at this time, my thought process is, okay, this swing high might hold, the market might now reverse back and hit my stop loss, which is somewhere about here. So I exited half my position at this level over here. Okay, half my position is exited and the remaining half is still, I'm just holding that trade. Then what happened next is, at this point, right, I am looking to ride the trend on the remaining half of my position. So half position is exited for a small profit and the remaining half is still holding to see how much further the market could move in my favor. So the way I trailed my stop loss was using 3 ATR on the daily time frame. So if you look at the daily time frame, so at this point, okay, was where I exited my trade earlier, you saw on the 8-hour time frame. So what I did next is that to trail my stop loss, I just pull out this chandelier scroll indicator, and my trailing stop loss is now actually just below this blue line. So if the price at any one point in time, the daily time frame breaks and closes below that blue line, I'm out of this trade. So what happened next is that the market continued to grind higher in my favor, and recently it did a small dip. I'm not sure you can see, but I'm going to zoom in. You can see that on this day, this candle, it actually break and close below this purple line. So my trailing stop loss is hit, or rather it actually break and close below this blue line. Okay, so my trailing stop loss is hit and I exited this trade. So overall, this one is a winning trade for me. Now on the other hand, let me share with you another trade that I took, but this one didn't quite work out for me. Okay, so thought process is very similar. Again, on the 8-hour time frame for this market. And notice over here. Okay, so for this one, again, the market, I noticed it's in an uptrend. So I was looking for buying opportunities. Price came into this area of value, this area of support. And on this candle, we have a very nice green bullish engulfing pattern. I went long on the next candle open. Okay, so it was somewhere here. Stop loss, 1 ATR below this lows. And my first target was just before this swing high where potential short sellers could come in. So I set my target right just before that swing high. What happened next is that the market went in my favor a little bit before it just boom collapsed down lower, and I got stopped out on this spike down lower. And as you can see right now, what happened is that the market continued to rebound higher, and I actually kind of missed this huge chunk of the move up higher. And it happens in trading, right? You can have you can be trading with the trend. You set a proper stop loss and you still get stopped out and the market does a 180-degree reversal and then, move in your direction. So it's really part and parcel of trading, and I want to share this with you because it happened to me as well. Okay, so these are the couple of trades that I took, right? And one went in my favor, one didn't. And if you look at in terms of the trading setup, they look pretty much similar. The concept is the same. Trading with the trend, trading from an area of value, and then having a valid entry trigger to enter a trade. So looking now at this week, right, let me share with you a few trading opportunities that I'm looking at. First one is the pound against the yen. This is the 8-hour time frame, and again, you can see on this time frame, market, right, is trending really nicely. And if you overlay with the 50-period moving average, you notice that it's also acting as an area of value. Tested once, twice, almost a third time over here. And right now, it's kind of heading higher in the middle of nowhere. So at this point, I'm not looking to trade the pound yen. I'm not looking to buy the British pound against the yen, because the price now, to me, it's in no man's land. It's in the middle of nowhere. So it's somewhere about here. If you think about this, right, if I were to set a logical stop loss, it has to go at least below this swing low. And I usually set it 1 ATR below it, which is probably somewhere here. So you can see that this is kind of like my potential, or rather the size of my stop loss if I were to enter a trade right now. So what I like to do is to let the market come to me, let it come to an area of value. And where is the area of value on this chart, on this time frame? And it's actually over here, which is I'm looking at this swing low over here. Okay, you can see previous swing high became a support and became support, and right now I'm looking for the price to retest this level around the 147.50 level. We have the this area of support as well as this 50-period moving average to act as a confluence. So what I'm looking for is for the market to form a bullish price rejection, as what you've seen earlier on New Zealand yen, Aussie Swiss franc, looking for a bullish hammer, a bullish engulfing pattern, for the price to quickly reject this level and close up higher. When that happens, I'm looking to buy on the next candle open. Stop loss will be 1 ATR below this lows. Target, right, would reference either this swing high or this one over here, depending how the price react at these levels. That's for my first half of the position. For the second half of the position, I'll be looking to ride it, right, and to catch the trend, right, if it does, continue up higher. So in a way, half of my position will be exited as a swing trade, booking some partial profits, and the remaining half is to ride the longer term trend. Because if you look at the trend on the 8-hour or the daily time frame, it's still generally to the upside. So I'm looking to, ride with the trend. Okay, so this is pound yen, the first setup that I want to share with you. The next one is platinum, a commodity. If you look at this market on the daily time frame, again, the concept is pretty much similar. Market is in an uptrend and forming a series of higher highs, higher highs, higher highs, higher highs, and higher lows. Higher low, higher low, higher low, higher low. Okay, so like this karate movie, higher low. Okay, so what I'm looking for is again the price has now made a pullback into this area of value. There's a previous resistance which could become support. And if you overlay the 20 MA, all right, you can see that it didn't really respect the 20 MA to the exact level, but generally you can see that around that area you found price rejection, right? Bounce here, 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 and now possibly over here. So the way I'm going to trade this is that this market now has shown signs of strength. The most second recent candle, this candle here, show that the price has closed higher for the day. Okay, so what I'm looking for is I know historically, right, based on my statistical data, I've backtested a number of markets, forex and futures, right, and I know that platinum, right, it's a market that whenever it breaks above the previous day high or whenever it breaks below the previous day low, it tends to have follow through. So in a way, you can call this like a trending market, a market with momentum. Whenever it breaks above the previous day high or the previous week high, it tends to have a follow through. So what I'm looking for is that since I already have a bullish bias on platinum, I want to use this, I want to stack this statistical behavior in my favor. So if platinum can break above the previous day high, I'll be looking to buy, placing a buy stop order to get into a trade. Stop loss again, just 1 ATR below this lows, and my first possible target just before this swing high, and then to ride the remaining half of my position to catch the trend. So I'm going to do a quick stop loss, right, to share with you how to actually set your stop loss using the ATR indicator. So I'm going to search ATR. I like to use 20 period moving average. I actually have it over here already. So you can see over here 20 period, and I use SMA. So what do you see over here for platinum? The value now, it's about, if you look at the most recent ATR value, it's about $50. You can see it's about 49.2 over here. But let's make things simple. Let's say it's $50. So what you'll do is that you find out what is the low on this candle over here. So it says that the low on here is about 1169. So you take 1169 minus $50 and you'll get about $1,120. So 1169, you minus $50. This is the low of this candle here. 50 is the ATR value, which is, I rounded up a little bit. And what happens is that you're going to get about 1119 or 1120, you know, plus minus $2. Not going to make much of a difference. So my stop loss will be at this level here. As you can see, 1120 somewhere about here. And I'll be buying on the break of this previous day high over here. Okay. First possible target, again, just before this swing high, possibly before the 1320 level somewhere about here. And I'll be looking to ride the remaining half of the position to see how much this market can move in my favor. Because after all, I'm still trading with the trend. Okay, so one last trading setup that I'm looking at. This one back to the stock market. So let's have a look. So it's CALX, which is over here. So for this one over here, you can see that this stock, right, nice, beautiful uptrend, CALX. And you can see that daily time frame forming a series of higher highs, higher lows. Pretty much a no-brainer uptrend. So where is the area of value? Now we know the trend is up. The next question is, where is the area of value? So what I'm looking at is two possible area of value. One is over here, and then one is over here. Okay, so these are two possible area of value to pay attention to. And if you want to overlay with the 50-period moving average, you can see that it's also acting quite nicely as an area of value. Tested once, twice, 3 times over here. So I would say the $36 is the first area of value to look for, and possibly by then the 50-period moving average would have, you know, caught up with the price, and you have two confluence factors coming together. Let me just redraw that. Okay, this is the area of value around here where previous resistance could become support. 50 MA will probably, you know, inch up higher. When the market makes a pullback, I'm looking for a bullish price rejection for the price to head up higher, close back above this previous resistance, which could become support. Looking to buy on the next candle open, stop loss 1 ATR below this lows. First possible target just before this swing high over here. Okay, and again, the way I set my stop loss is using the ATR technique. If you just pull out the ATR indicator, you can see the ATR value is about $2.12 as of right now. So the concept is really the same, whether you're trading FX, stocks, or whatsoever. And by the way, if you're enjoying this training, right, what's happening right now is that for a limited time until this weekend, I actually have opened up the doors to my premium training program. We have a couple of programs. We have the Ultimate Price Action Trader, which is this one here. Okay, you can see it over here, the Ultimate Price Action Trader over here. Okay, so this program, right, really focuses on helping you become a price action trader to trade without indicators, news, sentiments, and much more. So it's a discretionary nature. And the other one over here is called the Ultimate Systems Trader. This one over here, right, helps you to trade the markets in a systematic manner, you know, without looking at charts, without doing much technical analysis. So depending on which method you prefer, and if you prefer both, we have something called the Ultimate Trader Bundle, where you can get both of this special training program at a discounted price. So really, the link, I'll put it below this video, or if you want to manually, you know, go to the webpage, you can go to tradingwithrayner.com/special. Again, this offer is just until this weekend. I'll put the link below this video. You can check it out if it suits you. If not, I wish you good luck, good trading. I will talk to you soon.